Good evening, all the members. We at JP Nagar CP Study Circle of WRC of ICI. We welcome all the members on our today's virtual event on the important amendments in the TDSTCS provisions. And for the today's sessions, we have the very eminent speaker, C. Avinesh Rawani, sir, Chartered Accountant. We have with us our immediate past convener, C. Krishna Kumar. We have our deputy convener, C. Purvi Bagheria ji with us. Before we take our today's sessions, before we go towards the formal introduction, first we'll run through our institute motto song as a mark of our respect. So while we run our institute motto song, we request all the members, so please remain in the alert mode as a mark of our respect. So now we are running our institute motto song. One second.
य एष सुप्तेषु जागृति य एष सुप्तेषु जागृति कामं 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 कामपुरुषो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्लं तद्ब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शितः सर्वे तदूनात्यपि कश्चन एतद्द्वैता 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 एतद्द्वैता.
Thank you, members. Now after our institute motto song, now we are requesting our immediate past convener, CA Krishna Kumar ji, to formally introduce the today's speaker. Krishna Kumar ji, over to you.
Thank you, Jayesh bhai, for giving me this opportunity. Now I am giving the formal introduction of today's speaker, CA Avinesh Rawani ji. So CA Avinesh Rawani is BCom, FCA and DISA by qualification, and he is the member of our institute since last 29 years, and he is running the firm in the name of Rawani and Company since 1993, and majorly practicing in the area of direct tax, audits and company law matters. And he is the member of various study circles and study groups of WRC of ICI. He had already taken the lectures more than 600 on the topics of income tax and company law. Regarding his other achievements, he is the visiting faculty for corporate houses and IIM. He is also contributing articles to various study groups and websites, including ICI Journal. And he is the core team member of ICI in handling e-filing help desk on issues of uploading, filing of various e-tax audit reports and e-IT return mandates under the provisions of Income Tax Act. He is also the special invitee member of the Direct Tax Committee of ICI for the year 2018 and Study Group Member Committee of 2009 since 2019. He is also the member of Study Group of Corporate Law and Governance Committee of ICI. About the publication, he is the member of Law and Representation Committee of Chamber of Tax Consultant. He is also the co-authored the book on fringe benefit tax published by Malad Chamber of Tax Consultant in the year 2009. And also technical guide on ITR forms published by Direct Tax Committee of ICI in 2018. guidance note on revised tax audit reports notified in 2018, published by Direct Tax Committee of ICI in 2018. He was also part of the team member and contributor to the Practitioner's Guide to Audit of Small Entities revised in that was revised in 2019. About his other contribution to recent publication to CLG of ICI, to the book on technical guide on easy incorporation of company, and technical guide on changes, registration, modification, and satisfaction under Companies Act 2013 and LLP Act 2008. So with this small introduction of today's speaker, C. Avinesh Rawani ji, I present you before Sri Avinesh Rawani. And sir, congratulations and welcome to our study circle. Now the floor is yours.
Okay, before thank you, Krishna ji. So
Yeah.
before today's eminent speaker, Sri Avinesh Rawani sir, take us through all the important TDS/TCS provisions. As we all know that the Union Budget 22 has has amended the most of the TDS/TCS provision, and rather they have widened the scope of the TDS/TCS provision, and the related interest penalty prosecution related provisions are also been amended. So we request all the members, whatever queries they have related to this today's topic, to please write all your queries in the chat box. During the sessions or maybe at the end of the sessions, as per the time permits, we request our today's speakers to take us through all the queries, and whatever answers we can answer at the end of the sessions. So we'll take the question answer sessions at the end of the session. So we request all the members to please write out queries in the chat box. And now, Avinash sir, the floor is yours. Avinash sir, can you unmute yourself?
Screen is visible?
Yes, yes.
Screen, can you share the screen, sir?
The screen is visible. Yes,
Okay.
no, so screen.
Yeah, it's now visible.
Now it is visible.
Thank you, Krish Kumar ji, for the introduction. Jayesh bhai, Purvi, and all other dignitaries of JB Trinagar Study Circle for giving me this opportunity. And last week when this topic was selected, that's when we had this discussion that about speaking on this notifications and circulars relating to TDS. I was just wondering what to speak on this circular and topics, but I think all the last in the last week we are having almost around 3 new circulars from the ministry, and which are actually not the circulars but the clarifications, the nature of clarifications which the ministry has come out, basically about the provisions which has been introduced in the last 2 budgets. So I have given basic importance to this clarifications in this for the deduction, discussions today's topic. Starting coming to this, this basically you are all aware about the TDS provisions, that chapter 17 of the finance, this chapter 17 deals with the TDS provisions, and we have almost around 44 TDS sections which deals with the TDS provisions, and of about 192 to 196 provision deals with the nature of provisions where TDS has to be deducted. And now if you see, almost all payments which you make, TDS has to be deducted directly or indirectly and all. And while doing as a chartered accountants, our responsibility is that we need to deal while auditing, we have to verify that whether the TDS is applicable or not. And directly or indirectly, each of the payment ambit of the scope has been covered. So from 192 to 196D, almost all sections, subsections have come. And in between also, if you start from 194, it's 1, 2, A, B, C, D, everything has been covered. And other sections deals with the compliance related provisions. And several payments such as salary, interest, brokerage provisions has been covered, and where you have to deduct the provision TDS, we have to deposit them, and you have to comply with other requirements also. So basically, it deals with three type of Ds, wherein you have to deduct, deposit, and declare. And if you don't follow these provisions, and then you have the sets of defaults which are specified, and if you don't follow the rules, you land up with the penalties also. And after deducting this, depositing this, you have to issue the TDS certificates, and these all compliances are being made online. And basically, if any person comes with you that you don't deduct the TDS, then generally, which is when you deal with some people, they don't like you that TDS is required. Deduct when they come to the SSC that you don't deduct the TDS, then what is the remedy which is available, that you have to go to the TDS department and apply for the lower rate certificate or nil deduction certificate. That even that provision also is there in the TDS law, and you have to get this certificate, and that also has been made online. And especially for non-resident people also, they can also make the application for deduction, nil deduction certificate online. So that provision also has been made online. So this all you can do it on the Traces website, which is dedicated website of the income tax department, that is on the Traces. Now, each provision everybody is aware. I don't need require to deal with this in the detail, but there are some rationalization of provision which is there, especially for the government people. They deposit, they don't have to actually deposit the TDS, but they have to make the book deposit. Entries have to be passed in the books, and when they have to pass the books entries, they have to do it on the same day, because when you deposit the TDS, the TDS is deposited, you get the challan number which has the SIN number, that is, we call it as a CIN number. But when the government people, they actually don't deposit the TDS, but they actually transfer this TDS by way of an adjustment entry. And when they transfer these entries, the transfer is being done by way of a book entry, which is called as a bin number. And especially in case of like schools or such organization which is run by the government department, wherein it is very difficult that they don't get the credits for the TDS. And in such a case, it is very difficult for the SSCs to get the credits for this TDS, especially for the government department. They have the separate due dates for them. So when the TDS is this deducted by them, for them the due date is the same day wherein the TDS is deducted. First of all, and for the other SSCs, that when the TDS is deducted in the month of March, the TDS is 30th of April, and the interest is being levied for such defaults. So this has to be kept in mind. And TDS after deposit, you have to file the returns and certificates has to be issued. That is, everybody is aware. So I'm not discussing much in detail, but one query was raised that whether the consolidation of the payments can be made if the deductions are there in a particular month. That is, suppose if for a particular SSC, if there are 4 to 5 deductions which has been made during the month, then whether the entries can be combined and a single entry can be reported, then yes, definitely you can just report a single entry in a particular month, and then you can report it. So that is permitted. So that is one query which is there. And for TCS certificate, also the quarterly certificates can be issued in form number 16B, which is so this TDS TCS certificate is in form 27B, which has to be issued. So this is basically related to TCS TDS provisions. Then coming to a press release which came on 13th May to 13th May, that is So section 192 was being amended by this press release 13th May. It says that when the ESOPs are being given for startup companies, that is the TDS, when it has to be deducted. So there are some which in TDS some guidelines which has been given that when the TDS has to be deducted, because this was a long pending issue which was raised by many startup companies, because they basically they are facing the problem of the startup companies. Generally they have a cash crunch, and this issue was that they generally get the payments, they are getting the payment by way of shares, and they generally get the shares by way of a remuneration, and then the tax was being deducted at the time of ESOP. So this was a demand this demand which was pending from long back. So when the TDS was required to be deducted, so the government has given the clarification by way of a press release on 13th of May 2020, and which was incorporated in the budget. Now it says that from the financial year 2021, that is assessment year beginning from financial year commencing from 21 onwards, that is assessment year 21-22, the tax will be required to be deducted as under, that is within the 21 within 14 days, that is after the expiry of the 48 months from the end of the 11th assessment year, when these ESOPs are being exercised, option is being exercised, or from the date of the sale of such specified security or sweat equity shares by the SSC. So if the SSC has been given the ESOPs, and if the SSC sells that shares, then the TDS will be required to be deducted in the year in which such shares have been sold within 14 days, or from the date the SSC ceases to be the employee of the person of that company, whichever is the earliest, on the basis of the rates which are being in force for the financial year in which the said specified security or security is allotted or transferred by the eligible startup referred to in section 80IAC. So startup has been defined in section 80IAC. So that company has to be registered as a startup by the company. So if this provision is applicable only to the startups which are registered as a startup under section 80IAC, and then only that company is eligible for such provisions. Other companies are not eligible for these provisions. So it clearly says that if the company, the SSC, has not sold the shares, if he has been given the shares, ESOPs are being allotted, and if he has not sold the shares within that 48 months, so after the expiry of 48 months, within 48 for this 14 days, that after the end of the 48 months, then that in that assessment year, that tax has to be paid. Or if that employee sells the shares within any time during that 48 months, then at that time, or if that employee leaves that company, that at that time, any of this event which happens, which is the earliest event, at that time the tax has to be paid. So this is the guidelines which has been given. Then these are the provisions which became effective from the Finance Act 2021, that is TDS on dividend. Earlier the dividend was taxable in the hands of this dividend distribution was there. The dividend distribution tax has been removed, and now dividend is taxable in the hands of the recipient. And TDS has become now, TDS is to be deducted under section 194. So TDS is now that to be deducted under section 194, that is at the rate of 10% to declared by on the dividend declared by the company. But basic exemption is there, that is if the dividend is less than 5,000 rupees, then TDS is not required to be deducted. And if the dividend is paid to LIC, GIC or such insurance companies, then they are exempted. It is paid to be by the body corporate to resident recipients. So if it is paid to non-resident, then this provision will not be applicable. Then at that time 195 will come into picture. Similar way, 194A, there was some changes, that is exemption which was given to the large cooperative society, that is when the interest is being paid to large cooperative society, the dividend, the exemption has been withdrawn. That is, large cooperative society has been defined that whose turnover, sales or gross revenue which is exceeding 50 crores in the previous financial year. If the any interest has been paid, then TDS is required to be deducted. The basic exemption which was there, there is there definitely there is 40,000 and 50,000 which is available to the senior citizens, that is now still available. Then 194C, a minor amendment is there, that is contractors work contracts. There has been an amendment which is there. Now it says that works contracts will now include the cost of raw material, that is in which if the contract is purchased from the associates. What was happening? That the TDS was deducted only on the labor cost. Now, if the material is purchased from if the contract has been given, including labor, and if the material is purchased from the associate company. Now, associate company has been assigned as a definition has been given under section 40A to B. So, if any material contract has been given, which is including material, and that material is being purchased from the associate company, then TDS will be required to be deducted including the material cost. And that TDS will be on the full value of the material. This full value of the contract price, including the material cost. That is, TDS will be at the 1%. If the person is a recipient, is an individual or HUF, and 25% in any other case. Then coming to section 194J, that is fees from technical services, is now required to be deducted under section this 2%. That is, now there is a slight definition between slight difference between fees for technical services and fees for professional services. So there has to be it has to be taken proper care that what should be a fees for technical service and fees for the professional services. The royalty for sale and distribution of films will be taxable at the rate of 2%, which was earlier 10%. So that has been definition has to be taken as per the fees for technical services definition should be taken as per section 9 explanation section which is given in section 2 subsection 6 and definition section 2 subsection 6(1) of the Income Tax Act. Since section 194K also has been wherein the mutual fund dividend also has been covered now, wherein the TDS is also liable to be deducted at the rate of 10% on the lines of section 194A, but it has to be there one exemption has been given that there will be no TDS on the capital gains part, only on the income which is declared under units. Section 194A which has been introduced from e-commerce transactions, which says that 1% TDS will be required to be deducted on the gross sales of services or both. What it says that sale of goods or provision of services of an e-commerce participant is facilitated by an e-commerce operator through its digital platform. Now, if you see, there are two circulars which has come in the current financial year, which relates to this section 194O, which is there on the e-commerce transaction. That is the TDS. It says that TDS at the rate of 1% on gross sale of or services or both. It covers gross sales of goods or services or both. Sales of goods or services or provision of services on e-commerce participant is to facilitate by an e-commerce operator. E-commerce operator through its e-digital platform means those persons who are having an e-commerce platform, means a person like Amazon or like Flipkart, etc. These type of persons who are providing an e-commerce platform wherein a person who has registered themselves on that platform and who is providing that type of services, these persons are liable to deduct TDS when they are making payments to the parties. TDS will be deducted at the time of credit or payment, whichever is earlier. But what it says that exemption to the transactions covered under any other TDS clause or an amount for hosting, advertisement or other non-related services, individuals exempt in services. Now, suppose if the transactions are covered under any other TDS clause, if same transaction is covered under any other TDS clause, then the TDS is not required to be deducted again on that same transaction. This is what one amendment the circular has come. So same transaction, TDS will not be required to be deducted again. And if the transaction is for advertisement or relating to hosting of services related to advertisement, because advertisement is already covered under section 194C. When 194C already says that TDS is already required to be deducted over here, so TDS should not be deducted. Secondly, what it says that it says here that TDS individual and HUFs, how this, I'm getting this disturbance again and again here, that screen sharing stop and all. How to stop this? Nana, this admit and it is coming over here. Individual and HUFs are exempted. Individuals and HUFs are exempted if the value is less than 5 lakhs and PAN and other is given. So here it says both this condition has to be satisfied. If the individual and HUFs whose transactions are less than 5 lakhs rupees, the PAN and other, if they give the PAN and other, then they are exempt. Otherwise, they are covered. So this condition is to be required to be fulfilled. Second here is TDS on cash withdrawals, that is 194N. So this was again, provision was already there. This provision has been modified on 1st July 2020, where now it says that relevant deductors and payers, that is a banking company or a cooperative society, that is a cooperative society, cooperative banks or cooperative societies who are engaged in the banking business, and the post office. The rates of TDS are, especially if the person is a non-filer and who has withdrawn the cash, which is exceeding 20 lakhs, but up to 1 crore, TDS 2%, that is the person who has not filed the return. If a person is a non-filer, if he has withdrawn the cash from the bank, at the time of withdrawing, the bank has to deduct 5%. And in other cases, if the cash is exceeding rupees 1 crore, 2%. So in case of a filer person who has filed the TDS income tax return for the last 2 years, TDS will be required to be deducted at the rate of 2%. And in case of other filers, if the non-filers exceeding 1 crore, non-filer is there, then 5%. If it is between 2 to 20 lakhs to 1 crore, then 2% if the person is a non-filer. And for this purpose, the income tax department has come up with the utility which is available, wherein the banks and these banks and the societies, etc., then they can just put the PAN number and they can verify whether the person has filed the return for the last 2 years or not. That can be verified, and based on that, the TDS can be deducted. Now, specifically, it says non-filers are those persons who have not filed the returns of income for preceding 3 financial years, for which the time limit of filing the return is applied. This is for the 3 financial years, not to 2 financial years. Then it is applicable to all the pays except the following: that is government, banking company, cooperative society engaged in the banking business, and the post office business. Business correspondent appointed by the bank. White label automated teller machines operator, that is ATM operators, are exempted. Commission agent or a trader operating under the agriculture produce APMC operators are exempted, and who are registered under the APMC concerned, they are exempted. Then these persons are, that is cash disbursement agencies are exempted. That is basically those who are having the cash replacement agencies, that is those who are going and filling up the ATM machines regularly. These people are also exempted from this type of this notification. This is a notification which has come up, and these people are exempted. Other sections wherein 194 LBA, where is a concession which was given, concession of deduction of 5% by a specified company or a business trust on a distributed income paid to non-residents, that is non being a company, the rate of deduction is increased to 10%, which is effective from assessment year 21-22. To section 194 LC, that is concessional TDS rate of 5% be by a specified company or a business trust on interest paid to non-residents. The state concessions deduction is extended to 1st July 23. From 1st July 20, the rate of the TDS is reduced to 4% on interest payment against the borrowings through issue of long-term bonds and this regional development bonds, which are listed on a recognized stock exchange by issued by an IXC. So these are the other concessional rates which are extended. The period of concessional TDS of 5% is extended of to 1st July 2023 from existing 1st July 20. In respect of this concessional rate will also apply when the interest is paid to FII and qualified financial institutions in respect of investment made to the in municipal debt security also. Section 195 of the Act for the deduction of tax in respect of income, which is in respect of income paid to non-residents. The second provision relating to the interest paid by the government or a public sector bank with meaning with the meaning of section which is section 1023D of or a public financial institution. This is to be made only at the time of making actual payment. A deduction of tax to be at the time of crediting the interest in the books of accounts. The exemption provided to dividend referred into section 1 is proposed to be deleted. So these are the amendments which has been made to the other sections. Then section 194 certain clarifications also has come on September 2020. Now section 94 will not be applicable to the transactions which are done for the commodities exchange. That is these commodities exchange which are listed and which are recognized transactions which are done through recognized stock exchange, that is related to the stock exchange transactions, which way and this 194 will not be applicable, and also to the clearing corporations which are located under international financial stock IFSC. This will not be applicable. Then 194 will also not be applicable for electricity renewable energy which are registered under CERC, these power exchanges. Then payment gateways are also not required to deduct TDS, which are there's e-commerce transactions or e-commerce operators are also not covered. They are also exempted under section 194. Then 194 also the exemption has been given to the insurance agents, insurance aggregator providers, and it also says that 5 lakhs limit will be applicable. For this 5 lakh exemption limit, you have to see that this was made applicable from for this 1st of October. So that applicable limit you have to consider it from 1st April 2020 onwards. That is the transactions done from 1st April 2020 to 30th September 2020 also has to be was also required to be considered. So these are the clarifications which has come to by circular number 17 of 2020. Then practical difficulties we have that it says that e-commerce operator is been defined, that is a person who manages, owns, operates and manages digital or electronic facility, a platform, or is responsible e-commerce partner. The stipulation as required to the responsibility of finding e-participants has been done away with. Then SUS 206AA of the Act provides for the higher rate of deduction of 20% in case where the payee does not furnish the PAN to the deductor, but for the purpose of section 194, the deduction will be 5%. So in case the person does not furnish the PAN, he says that it is 5%. Now the changes which has come is that it is applicable only to the resident e-commerce provider and not to the non-resident e-commerce provider. This is the biggest change which has come to by way of a circular. Then direct receipt of money from the customers by the e-commerce participant in cash on delivery. Because what happens when the e-commerce participant are there? Because when you buy any goods, when a customer orders any goods, there is a common this participant is allowed. That is cash on delivery component is there. Then for that purpose, this thing also needs to be computed, because whenever the person orders any goods and cash on delivery orders are also there. So at the time of computing this limit, cash on delivery orders also is required to be computed in that 5 lakhs limit. So when the payment is required, when the payment gateway makes the payment, at that time he has to compute all these transactions in aggregate and has to deduct the TDS at the time of making the payment. E-commerce participants will also continue to deduct TDS from payments made to e-commerce operators under the applicable provisions like 194J, C, H, etc. So what happens that, see, e-commerce operator and e-commerce participant both are the separate parties. So e-commerce participant is a person who is participating in, and e-commerce operator is a separate person. So e-commerce operator, when he is making the payment to the e-commerce participant, let us say for an example that I as a chartered accountant am registering myself on a particular Amazon site that I will be providing. I will be, so basically it is just a fictitious example that we cannot, as a chartered accountant, can register on the any portal to provide any services. But just as a fictitious example, I am telling that suppose we as a chartered accountant register on any portal that we will be providing any service, or suppose we as a 4 or 5 chartered accountants, we get together and we start a portal that we will be providing services online for filing the returns, and we start a portal that client should register on our portal, and returns will be filed. That person comes, 5, 6 chartered accountants are there on the portal, and they pay the fees on the portal, and then returns will be filed. They can avail the services of any of the chartered accountant, and they can file the return, select chartered accountant and file the returns. Basically, that service provider, that the person who starts the portal, they can they will collect the fees, and out of this fees, the person will deduct the charges and pay the balance fees, balance the fees. So in that way, that portal works. So what will happen? The e-commerce, the person who has started the portal, he will become an e-commerce operator. So when he pays the fees to the e-commerce parties, the person who have registered themselves on the portal, they will become the e-commerce participant. And so when the e-commerce, the person who has started the portal, he will pay the fees to the persons, to the chartered accountants who have registered themselves. So at that time, the parcel, he will deduct the TDS if that limit has been crossed. But when this chartered accountants who have registered them, so when they will make any other type of payments, like suppose they have made some given some professional services or some other services to the portal, at that time they make any payments. So suppose they have given some professional services to that company, then they are also required to deduct the TDS. So they are not exempted. So basically, this is what the circular wants to say. And when that platform is there, so that platform, if that platform which a creator a person is a resident, creator of that platform is a resident of India, applicable. And no adjustment for goods return is there. So TDS has to, because what happens that on this e-platform, major 50% to 60% of the goods are there. People see, they use the goods, and after some days, if they find it fit, not fit, then they return the goods. Then when the goods are returned, then these things are deductions. No adjustment for goods return has to be there. Then TDS on deduction has to be made on the gross amount of sales or services. That is, TDS to made on the gross amount, and not this. Basically, GST also has to be included in that. Non-residents e-commerce will also need to be comply with the section 194. That is now has been removed by this new circular which has come recently. So that is done away with. Earlier it was there. So basically, this is the just graphical presentation. E-commerce operator, e-commerce participant should be a resident of e-commerce operator. Even if it is they are a foreign operator, foreign registered, they are also required to deduct the TDS. But e-commerce participant should be a resident of India. So this is basically the e-commerce operator. Even if it is now, what has happened that Basically, the best example is that now Apple phone, if anybody is buying it. So the Apple phone, Apple Music services, they are taking the music services of many Indian companies like Savan Music and all. So they are taking the Savan Music. Basically, these are Indian companies. So they are taking the services from this company. So even they are taking, they are required to deduct the TDS if they are making the provision for this type of services. So basically, e-commerce party Savan Music is a e-commerce partition which is resident of India. They are required to deduct TDS. So e-commerce partition being individual partition. So basically, this is the summarized this. So if e-commerce participant who is a resident of India, other than the individual or HUF, if he has given the PAN, deduct the TDS at the rate of 1%. If he has not given the PAN or Aadhaar, then TDS has to be deducted at 5%. If it is a party income as being an individual HUF or resident, transaction less than 5 lakhs, no TDS deduction. If provided PAN or Aadhaar, if not given PAN and Aadhaar, then this provision will apply. So this is applicable from 1st October 2020. So while doing the tax audit, this provision has to be taken into mind, kept into mind. So this is the summarized provision of section 194A. Then 196A of the Act says that he has revised the applicability that TDS, which was applicable on the units of Units Trust of India, which was there, that has been made applicable now. 196C being the tax on income from foreign currency bonds, that is shares 194, because 1150 is no longer applicable. So 196D says that even the dividend or the interest on bonds which is being paid, TDS will be applicable. 201 related to interest on late payment of TDS, which is now given the extra time for passing the order to the person in the default. Now it says that when the correction statement is being filed, there is now the extra time is begun. So if you file a correction statement, SSC files the correction statement, the assessing officer has been given the extra time to pass the order. And if the fraud has been there, so assessing officer has been given the powers to pass the orders. So this is the purpose of the amendment which has come in the section. Section 204 of the Act, which defines the meaning of the persons, that is who is in charge. Basically, what happens that a person, especially in the case of non-resident companies, the person who is dealing with or who is in charge in India for who is the authorized agent, who authorized agent for filing the documents on behalf of the foreign company, will be liable for any actions to be taken on behalf of the foreign company. So especially those who are those chartered accountants or those persons who are just using the email IDs and mobile numbers for filing the return, especially in case of persons who are not available in India. So be careful, because now they can be held responsible for such type of companies. Then TDS continues to be deducted for individuals or HUF, because 1 crore limit, if you are that is continues to be deducted for individual HUF who are having the turnover of 1 crore or more in the previous financial year. That is not been done away with. So this was the question as whether that has been removed or not. But if you are not liable for getting the accounts audited, that turnover limit, that secret tax audit is not applicable because of the tax audit provisions. 44AB is not applicable due to this 5% criteria which has been there for turnover limit increase. That tax audit will not be applicable due to 44AB non-applicability, 5% cash limit. But TDS's provisions are applicable for section 194A, 192, 194C, 194H, 194I, 194J, 206C, despite of this not being applicable, it is applicable. Then TCS about a liberalized scheme of remittance, that is section 206YG, is binding on the authorized dealer, that is foreign remittance which has been made out of India. The liberalized remittance scheme is applicable to resident individuals. A person who is a resident of India, especially in case of income tax and FEMA, there is a vast difference. So here it says that TCS on remittance, liberalized remittance scheme, uh, definition has to be taken as per the FEMA, not as per the Income Tax Act. And FEMA definition says that the person who has resided in India for more than 182 days during the course of preceding financial year is the resident under the FEMA, but does not include a person who has gone out of India or who stays out of India, in either case for taking up of employment or business or vocation, or in such circumstances would include also intention to stay outside India for an uncertain period, or a person who has come or stays in India in either case otherwise than for taking up of employment or for taking up a business or vocation in India, or his intention is there to stay in India for an uncertain purpose. So this has to be taken. So while deducting the TDS, when the remittance, it has to be for individual, this definition is applicable. For the FEMA company which is registered in India is taken as a resident in India. Then a branch or agency which is established in India. Then this section is binding on the authorized dealer for remittance under the liberalized remittance scheme and is bound to observe these definitions, but not under the IT Act. So section 206 ID is mandatory. The authorized dealer is required to deduct the TDS under the scheme, that is, if it is remittance is exceeding 7 lakhs in a financial year, 0.5% for the remittance for overseas education from loan obtained from a bank or a notified financial institution, and 5% for other purposes. And in case of a tour program package, 5% for remittance. There is no basic exemption limit which is given. It is covered from single rupee one. Then a seller of an overseas tour program package who receives an amount from any buyer, being a person who purchases such package, shall be liable to TCS at the rate of 5% and 10% in case PAN other is no given. So if a PAN and other is not given, then 10%, otherwise it is a 5%. So that has to be kept in mind. And if PAN number, and in this case, if the PAN number is not given, then you are liable to file this form number 60 and 61A. That is also mandatory. This has to be kept in mind. And there are due dates. This form has to be filed on a half yearly basis. It is the accept statement. This is mandatory. Then exemption is given if the buyer is liable to deduct TDS under any act. Suppose if this transaction is covered under any act and the TDS is required to be deducted, then no TDS is required to be deducted, TCS is required to be deducted, and the exemption has been given. So such transaction, that is, if to central government, if the embassy, high court, commission, trade representation of foreign trade, etc., the exemption is given to such type of remittances made by such parties. And certain other, and which says that which transactions are there, that is current account transactions, credit transactions, these are covered. That is which transactions are liable, that is just some of example which are there, that is private visit to any country, gift, donations, going abroad for employment, immigration, maintenance, travel, connection to medical treatment. All these transactions are covered for this, wherein the TCS is required to be collected. Then about acquisition of qualification of shares, acquisition of foreign companies. These are all the transactions are there, which are there. Then about 206C TCS on sale of goods. That is, if the previous year the turnover was there exceeding 10 crore rupees, then TCS is required to be collected and deposited at the rate of 0.51%. If the sale of that person exceeds rupees 50 lakhs, and 1% in the absence of PAN or other. And this was some new provision which was included. Then who is a buyer? Everybody is aware of this provision. I don't want to discuss much in details, but it also says that if the buyer is liable to deduct the TDS under any other provisions, then TDS is not required to be, TCS is not required to be collected. On the similar lines, 194Q has been introduced. Then 194 is Q has come, but circular number 1720 has come again on the lines of this lines that it says, clarifies that Section 206 IH will not be applicable for transactions in securities and commodity exchange, then will not be applicable on renewable energy. And on the same lines, and dealer of the car would not be covered by this provision. Also, the excess, because cars which have been exceeding rupees 10 lakhs are already covered by TCS provision because they are required to collect TCS. So this is not covered. But where the it says that no adjustment for sales returns has to be done. Then fuel supplies are also not exempted because they are covered by these other provisions. Then about circular number circular number about 206 AB and AC about the functionality which has been introduced and for the financial year 22-23. Now it says that 17th May 2022, the news functionality has been introduced. Now it says that you have to verify on 17 May 2022, the Finance Act has brought the following changes. That is, just mentioned under section it says that the provision for the higher TDS for 20 is not applicable on the tax to be deducted under section 194 IA, IP and enter over N. This is in addition to the already existing provisions of its non-applicability. Now, this is disturbing here.
Yes, Avinesh bhai.
This is disturbing in between. Something is coming in between here.
No, it is from I think your.
I'm not able because something is coming. I'm not able to read these presentations in between.
That lines, right?
It
is, I think, because of that keyboard, no, where you're just scrolling the slides.
No. Some. I think this participant admit. This is coming in between.
Let me check. So let me check.
Admit is coming in between. Something.
Okay, so people are joining. So basically,
this admit is coming in between every second it is coming admit.
Okay, so we'll just now hide that message.
Please hide all other things in between, no, please.
Please. Okay. Okay, thank you. Please continue, Avinesh.
Then this 17th May circular number 10 of 22 has come recently. That is now this. If you see that 206 AB and 206 CCA, which is related to now what has happened that you are required to deduct the TDS, this TCS, and you will see that the person who has if the person has not filed the returns for the last 2 years. If the person has not filed the return for the last 2 years, you are required to you have to deduct the double TDS at twice the rate. That was the provision which was introduced in the last Finance Act. And this year they have been in this Finance Act, they have made the changes. That change has come. That Finance Act 22 has brought about the following changes. Now that says that the provision of higher TDS under section 206 AB is not applicable. And the tax will be deducted under section 194 IA, 194 IB and 194 IN. That is related to the sale of property, rent and rent, etc. And this is in addition to the already existing provision of its non-applicability of the tax to be deducted under section 192, 192A, and 194B, BB and LB and N. That is now it has been extended to these provisions. So 206 AB, 206 double C has now been extended. So 194A IA, IB and 194L, this will not be made applicable. So this has been exempted now. Now what it says, another changes which has been made in this budget is, say, definition of specified person has been now amended. It is says that if the person has not furnished the return of income for the assessment year for the previous year immediately preceding the financial year in which the tax is required to be deducted, the previous year is to be counted to be the one whose return filing date of the 139 has been expired. And aggregate of the tax deducted at source and collected at source is rupees 50,000 or more in that previous year. See now, this what it says, both the condition has to be satisfied. Earlier it was 2 financial years, now but now it has reduced to 1 financial year. So here it has to be seen that for the assessment year 22-23, when for the assessment year with effect from 1st April 22. So for this financial year, you have to see that if the person has not filed the return for the previous year, that is previous year, then you have to deduct the, you have to follow this, deduct the 206 AB and 206 CCA has to be complied with. If the aggregate tax deducted, he has not filed the return and TDS and TCS collected at source is exceeding rupees 50,000, then you have to comply with this provisions. You have to deduct the tax at the double the rate. And now it is says that further it has been provided that the provisions of TDA 206 AB will not apply in case of the deduction on transfer of virtual digital asset under section 194(5) of the Act to a person being an individual or HUF whose sales, gross receipts or turnover from the business carried on by him or profession exercised by him does not exceed 1 crore rupees in case of business or 50 lakhs rupees in case of profession during the financial year immediately preceding the financial year. Such virtual digital asset is transferred, or if such person does not have any income under the head profit business or profit and gains from the profession. So this is the amendment by the clarification which is given by the circular, recent circular. Then further it says the logic of converting 2 years into 1 year has been explained in the circular. Now what it says that why this has been done. The list of the specified person is prepared as on the start of the financial year 22-23, taking previous year as 2021 as the relevant provision. Because now already 1 year has expired, the due date has already gone, so the list is already available. List contains the name of the taxpayer who does not file the return of income for the assessment year 21-22 and have aggregate TDS and TCS 50,000 rupees or more in the previous year 2021. So this is already available. You have the AIS utility, everything is available. During the financial year 2022-23, no new names are added in the list of the specified persons. Record based on the records collected, everything is available. This is a tax-friendly payable, the taxpayer friendly measure to reduce the burden on the tax deductor and collector of checking the PANs of the non-specified person more than once during the financial year. Due date is already on. Now the person cannot file the return. It is already available, so you can just now do it once in a year. You are happy. Once you try it, how you will be happy, you will come to know. If any person files a valid return of income filed and verified for the assessment year 21-22 during the financial year 22-23, his name would be removed from the list of the specified persons. This will be done on the date of filing of the valid return of income during the year financial year 22-23. So what happens once you have verified it? If the person filed the list of the specified persons will be readily available to you. So if you deal with that persons, if that person says that I have filed the return, definitely you can call for that return. You can verify that person, single person there, and you can comply with the provision. If any specified, if the aggregate of TDS and TCS in case of the special concern the previous year 21-22 is less than 50,000 rupees, his name would be removed from the list of specified persons. This would be done on the first due date. Under the subsection 1 of section 139(1) for falling in the financial year 22-23, for the financial year 22-23, the due date is 31st July 22. Belated and revised TDS and TCS returns for the relevant financial year filed during the financial year 22-23 will also be considered for reviewing the persons from the list of specified persons on a regular basis. Because now everything is available online. Then deductor and of the collector may check the PAN in the functionality at the beginning of the financial year and is not required to check. The list would be drawn afresh at the start of the each financial year and the above process would be repeated. Then, as per the new provisions, the section 206 AB and C, the specified persons shall not include the non-residents. So this is not applicable to the non-residents and the persons who do not have the permanent establishment in India. TDS and tax collectors are expected to carry out the necessary due diligence in respect of the non-residents about the applicability of the 206 AB and 206 CC on them. Circular number 11 of 2021, which was issued on 21st June 2021. It was seen that though this user-friendly functionality was provided to the tax deductors, it was explained thoroughly to the circular. Some of these deductors, collectors were asking the deductor and collector to produce this evidence. Now, you see the last year the exercise was that despite of this, the people were asking or collecting the evidence. But now you are not required to collect the evidence. You just verify it and you have to see that this is kept on the record. You have verified it, you have kept it on the record, and this is available is there. All the details also request to make this request to make note for this circular for the compliances. Then we have circular number 4, date of 15 March, which relates to the salary, and this circular runs into 127 pages. It is not possible for me to cover within this short period of time. But I have given the gist of the circular because it has the details, full details, how you have to deduct the salary, TDS on salary. It gives you the details of perquisites, how it has to be calculated. The present chosen employer will be required to give out to the person who is deducting the salary, TDS on salary is required to follow the guidelines which are given in the said circular. Then how you have to, the present employer will be required to deduct the TDS on the aggregate amount of salary, that is including the salary received from the former or the other employer. Relief also has to be given for arrears or advances. The deductor will also be required to verify the evidences or the particulars which are being given in the Form 12BB in respect of the deduction in respect of interest, which is allowed. Method of computation of salary is given, perquisites are given, examples are given along with the tables, how you have to give the deductions. Formats of the Form 16 and 12BB is given. References of the circulars are given for the deductions. Every circular which relates to the salaries are available in this circular. And procedure to pay the TDS, uploading of salary returns are given. Then all applicable related to guidelines related to the circulars which are applicable related to the salaries are available in the TDS returns. Then this TDS on EPF, which was made from applicable TDS on Employees Provident Fund. The interest this has become taxable on the Employees Provident Fund from 1st April 2022, and based on that there has been the GSR which has been issued on 31st August 2021. So all EPF suppliers, EPF subscribers, whatever the interest is being credited will become taxable from 1st April 22 onwards. So what the effective date is 1st April 22, and the final settlement transfers, whatever will be there, will be chargeable. Whatever the interest they will be getting, that has to be will be taxable if the contribution is more than the limit which is there above the limit. So in other cases where there are no final tranche, TDS will be deducted on the date of credit or the interest. So see, there will be two separate accounts which will be kept in the EPF. So what will be there? The voluntary contribution and the compulsory contribution. That there will be the two contribution will be there in the PF account. So whatever the voluntary contribution is there and whatever the mandatory contribution is there. So 12% is there. So 12% will be the mandatory contribution. Above the 12%, what will be there? There will be the voluntary contribution. So voluntary contribution, whatever the interest will be there, that interest what is credited to that account, on that interest, TDS will be required to be deducted, and that TDS will become that interest will become taxable. So taxable contribution part will be separate to the accounting of interest and maintenance as the closing balance to the current accounts. There will be also be a current account system which will be maintained by the PF authorities, and these accounts will be linked with the PAN number. And if the PAN number is not linked, then TDS will be deducted at the rate of 20%. And PF authorities will be deducting TDS on the interest which will be credited. And for that purpose, the TDS will be credited, the credit will be available. So rate of TDS will be the same as is applicable to under section 194A. And in case of non-resident, it will be as per applicable to the 195. So PAN number has to be given to the PF authorities. If there is no PAN number given, TDS will be deducted as per this 206AA, and you see that if 20 TDS is deducted as per 206AA, credit will not be available. Then circular number 12 of 2022, which has come on 16th June 2022, that is recent circular, just come yesterday only. That is the day before yesterday. That is about section 194R, about the taxability of the this sales promotion, business promotion exceeding 20,000, which was introduced in the latest budget, wherein now it says that guidelines has come, that is how TDS has to be made applicable and what will be covered, what will not be covered. That guidelines has been given. Now it says that it is not necessary for the taxpayer or deductor to check the taxability of the sum in the hands of the payee under section 28(4), that is which deals about the claimability of the expenses. That is whether it should be taxed at the taxable under any other section as 41(1). Then now CBDT clearly distinguishes the principles of governing the TDS under section 195 from the TDS under section 194R, and places reliances on the judgment which is there, which was held that TDS at a specified rate is to be provided. There is no need to see the taxability in the hands of the non-resident. Then any type of gifts, that is cash in kind, which is given for the sales promotion, will be covered for this. That is, it is clear that the perquisites covered under section 194R will be covered under section 194R. Even in the case of it is a capital assets which is given, in case of whatever nature which is there. The CBDTS category uses the phrase whatever nature or benefit, the TDS will be covered under this provision. Then sales discount or cash discount or rebates which are given is been kept within the ambit of, out of the ambit of this sales promotion. That is says that breather has been given, that rebates which are allowed to the customer, section 194 is not excluded from this. Then incentives other than sales discount, cash discount and rebates are covered. That is, if you give an incentive like gifts in the nature of cars, TV, computers, gold coin, mobile phone, etc. This is just a samples which has been given. That is, now if any doctors are basically given gifts, that is when they write some medicines, prescribe some medicines to promote their medicines, they give some foreign trips to doctors, and this is a basic sample, this practice which is followed. So this was also introduced earlier some years back, but due to some problems in the medical fraternity, this was removed. But then now it is through indirect nature, it has come back again. So basically, these people may be facing some problem again. They will be, see, let us what happens. The Agnipats, this we are facing, see the issues which are going on in the country. Then user of benefits of perquisites, that is now 194 will cover benefits of perquisites, even where there may be used by the owner, director or employee of the recipient entity or the relatives who in the individual capacity may not be carrying on the business or exercising a profession. So has to be seen. doctors who are receiving the samples, that is CBT, especially the purpose of introducing this provision was about the threshold limit of rupees 20,000, which is there. It says that any benefit which is exceeding 20,000 will be covered under section 194R. That is, CBDT has clarified that in case the doctors receiving free samples of medicines while employed in a hospital, section 1 will apply on distribution of free samples to the hospitals also. The hospital as an employee may treat such samples as taxable perquisite for employees and deduct the tax under section 192. So that is also circular says that then doctors working as a consultants with the hospital and receiving free samples, DDS would be ideally applied to the hospitals first, which in turn require deductible tax under section 194R, which result to the consultant doctors. To remove this because CBTS clarifies that an alternative, the original benefit or perquisite provider may directly deduct TDS under section 194R with regard to the consultant and consultant doctor as a recipient, and which will not be 195R may not be will not be applied to the government entity like government hospitals which are actually not carrying on the business or profession. Then valuation, how it has to be done, that is if the fair market value has to be followed, but if the valuation is not available, then provider who has purchased it, that should be the actual purchase price should be the value of the valuation, and the manufacturer provider has manufactured it, then the price charged to the customers and value should be exclusive of GST. That should be the valuation method. And for social media influencers, that is the benefit or perquisite being a product which is given to the social media influencer. Basically, now social media has been used as this for promoting this product. I've seen that YouTube, YouTube is the biggest social media influencer for promoting the product, and the products are being given to the promoter. So, and for that purpose, which is returned to the provider after it is given to the provider to use and then return back, then the influencers are not be subject to TDS. And if the product has been retained by the influencer, then that will be subject to TDS. Then reimbursement of out-of-pocket expenses, that is basically the expenditure is incurred by the consultant in his business or expenditure and is deductible as income. Then in that case, it should not be included. But applicability of section 194R says that would depend on the name in which the invoice or of out-of-pocket expenses is made. If the invoice is made in the name of the client and paid by the consultant, reimbursed by the client, and then it should not be attract TDS. And it's the same transaction if it is covered by way of a professional fees and then it is deducted under other category, others of such, then it should not be deducted as this covered under this provision. Then dealers for business conference, because generally what happens when the targets are fixed and the targets are achieved, then dealers are being given incentive and then their foreign trips, etc., something are sponsored. Then TDS, this would be liable to TDS, but it says that when it is a launching of new product or discussion as to how this product is better than others or obtaining orders from dealers and customers, teaching sales techniques to dealers and customers, addressing this, then should not be liable for TDS. Exception to rule is that a conference must be in the nature of, not be in the nature of incentives business to select dealers and who have achieved the particular target. So this is basically related to this. Then applicability of TDS, it says that under 194R is attributable to the relatives. The leisure trip is there or leisure component is there. Even if it is incidental to the dealer business or conference, then it will be applicable. Then family members, if they are taken or accompanying the person attending the dealer conference, then that also will be chargeable. The participants of the dealer or business conference for days which are on account of prior stay or overstay, then beyond the dates of such conference, then that also will be a part of this total cost will be this computed means will be calculated with whatever the total cost will be there will be calculated and applicable TDS will be deducted on that amount. Where cash component is insufficient, then what will happen? Then CBDT has clarified that on particular peculiar situation, where a person is providing benefit in kind and is required to ensure that TDS tax required to be deducted has been paid by the recipient, where cash is not sufficient to meet TDS. The deductor may rely on a declaration, that is advance. The person pays the tax and then that copy should be taken from the deductee, and that reference has to be given in the 26Q form and should be preserved, and that will be considered as an evidence, but has to be ensured that this tax should not be adjusted against other, because that should be reflected in form 26Q. This is what the circular says. And threshold limit of 20,000, it says that 194 comes into effect from 1st July 22. And though it comes from 1st July, the threshold limit has to be taken from 1st April 22 onwards. So perquisite will be counted from 1st April 22 onwards. So first 3 months also has to be included in that. And CBT also has clarified that benefit of perquisites on or before 30th June shall not be subject to TDS, though it will not be subject to TDS, but for limit of 20,000, it has to be conveyed. So if, for example, if the from 1st April to 30th June, whatever is given will not be subject to TDS, but from 1st July onwards, so if the amount has exceeded 20,000 rupees, so suppose it becomes 50,000, so on 50,000 TDS will be required to be deducted. Then coming to this, how to use this was the basic problem which was there. People have asked that how this 206 AB and 206 CCA. One biggest change which has been made here for this financial year, that last year you have able to keep this utility can you have to register on the inside portal to use this utility. So first step is you have to go on the reporting portal, that is you have to register this, and registered it on the portal of the inside portal. And to register on the inside portal, you have to just directly go from your income tax website, that is incometax.gov.in. Use your login credentials of TAN. You have to use it and not the PAN. And under that time you go on the pending actions, select the reporting portal, and you have to register it. You have to go to the new registration, and on the new registration you go to compliance check and TDS deductor and collector, and enter the relevant entity details, and you have to add the principal officer. Principal officer is a person in the case of a company or director or any of the persons, or in case of such more persons are there, then you can add nodal officer, alternate officer, etc. Then once you added, that person's registration has to be done, and you can after the addition, that person's registration is done, you have to preview the button. Submit the button, registration has to be completed, and acknowledgement receipt is being generated. The same will be shared to the email notification to the principal officer. The principal officer, the person whose PAN has been submitted, so that email registration, email ID, the mobile number and the email ID has to be given of that principal officer. The mail will go to that principal officer, the SMS will go to that principal officer. Once the registration is approved by the income tax department, the ITDRN will be generated and the login credentials will be created. And once this login created, credentials are created, then only this compliance check utility will be. So once this user ID is created, you have to log in to this report inside portal. On the left bar, side bar of the reporting portal, there is a login button which is there, wherein you have to log in with the PAN and the password which is received in the email, and you have to update the password. The PAN of the person, that is the principal's officer's PAN, has to be inserted. And login and continue. If the principal officer's PAN is registered for multiple forms, then there will be the ITDR, and he has to be associated as a compliance check for the tax deductor and the collector. Because once he is a registered ITDRN will be selected, and then that associated ITRN from the deductor has to be selected, And after successfully login, the home page of the reporting portal, the compliance check utility will be, shortcut will be provided from the login portal. And for each year, you will have to select they create the separate ITDI. This is mandatory. And here you have the option to select, two options will be there. You can select single PAN, so you can go for a single PAN search, or you can go for a bulk PAN search also. And for bulk PAN search, you have to have the compliance portal that you can just have a this. It says that you can have a CSV file. In single PAN, you will have to insert each one PAN, and you can verify whether that person is a specified person or not. A specified person is a person in whose you have to deduct PAN at a TDS at a higher rate. And in case of a bulk search, you have to just provide a list of the PAN, and in that upload a list of all the PANs, and it will give a list who are the specified person in that particular PAN. The advantage here is output result will be the current financial year, PAN which is provided in that output, name, March name of the person will be given as per the PAN allotment date will be there, PAN Aadhaar link status will be whether that person PAN is linked or not, and whether that person is covered under 2606 AB or 206 CCA. The PAN is so whether that person, so that will be available will be there. Then for bulk search, what you have to do is you have to download the CSV template which is provided by the inside portal. You have to just download the CSV template, and in that CSV template you have to insert all the PAN, and the maximum PAN you can upload is up to 10,000 PAN, and you have to upload the CSV. Once you have uploaded the CSV file, they will take time to verify, and it takes almost around based on the number of PANs you have inserted, it takes around 1 hour to 24 hours time. And once you have uploaded it, it will be shown available, and once it shows available, uploaded available, the status will be uploaded, available, downloaded, or link expired. So once it uploaded is done, so you have uploaded it. Once they have verified it, available option will be there. So once it shows as available, you download it, and once you have downloaded it, it will not allow you to download it again. So you have downloaded it is a one-time download, which will available, and once you have downloaded it, the link will get expired. So this is that you have to download it, and you have to just save this file for your references, and this report generated should be kept as a record for future verification at the same, because will not be available. And what will happen this, because then this link, this you can save it for tomorrow. Suppose if these details are available with you and any query is raised in the future, you can give this, that this was the status which is available. Because what has happened, the website status is such that whatever happens on the website may not be available in the future also, because I have personally experienced it in my case also. The returns which has been filed is now presently available, and now again when the complaints were raised several times, the return has been now found out in the system. So thus don't depend on the site blindly that it is available on the site, I will download it in the future and will keep it in the future. So just blindly do not rely on the site, download it and keep it for your future references. And when at the time of auditing, audit in the current audit, this provisions of section 206 AB and 206 CCA also has to be kept in mind for compliance of tax audit under section, and in clause number 34A, this will also be one of the compliance which has to be seen. Now what happens if the TDS compliance is not be seen? TDS compliance, if it is not there, these are the compliances of, if you don't comply, if the TDS comply, this failure to furnish form 16 or 16A is a penalty under section 272 subsection 2G, this up to 100 rupees per day if the default continues. If the person is liable to deduct TDS and has not applied for time, Then penalty under section 272BB for non-application of 10 rupees 10,000. If the person has failed to deduct the TDS despite of having 10, and then 30% of expenses will be disallowed under section 40 AIA, and tax is applicable. Department can recover the tax if the person has not paid the tax. The deductee has not paid the tax, then the department can recover, income tax department can recover TDS from you under section 2, that tax along with the interest under section 20119. These are the provisions for non-compliance of TDS provisions under the section 10. And even if you have deducted TDS and you have not deposited TDS, there is a prosecution provision, which is a rigorous imprisonment provision from 3 months to 7 years, plus fine for failure to deposit the TDS they are deducted at source and not deposited in time. You have deducted the TDS, you have not deposited the TDS in time, then also the penalty can be paid. Then 234E for not filing the TDS returns, everybody is aware. Failure to deliver TDS filing the returns, 100 rupees per day, 15G, 15H form filing, online 100 rupees per day. Failure to issue this statement for perquisite, that is 12BB, 100 rupees fine. Failure to mention PAN number of the deductee in the TDS statement is 10,000 rupees, that is 206. Failure to mention wrong PAN. Apart from the above, there are expenditure, that is creation of charge of the assets also is there under section 2012. So basically this is related to TDS provision. If you get any email, anything from any department, if this mail is not related to any source which has email which is not related to affiliated to income tax @incometax.gov.in, please do not respond to any mail. Any mail which is not associated to tds@cpc.gov.in or @inside.gov.in, please do not respond to any mail. Any SMS which is not related to any source code, please do not respond or any reply to this or any link which is not associated to this, because there are all messages which are not linked to this should not be linked or linked to this. These are any messages which you get it from any other sources other than this. Please respond to this email ID, webmanager@incometax.gov.in or incident@cert-in.org.in, because it is the chances that your PAN may be hacked or your bank account may be hacked related to this. So friends, this is related to the provisions and circulars related to DS. I have tried my level best to cover all the circulars and all the TDS provisions to the best of my knowledge. And if I have forgotten something, please forgive me for that. Thank you very much. And if questions are there, I'll be glad to take it. Thank you very much.
Thank you, Avinesh bhai.
I think questions, do we need as a e-commerce participants need to deduct TDS on commission charged by e-cooperative promoter sales? Please note that e-commerce operator remitted. Yeah, definitely you have to deduct TDS. E-commerce operator need to deduct TDS on commission charged by you. Yeah, you have to deduct TDS. TDS is applicable. What is the threshold limit of estimated income on 15G, 15H? I think 15G, 15H, you have that threshold limit of 10,000, that 5,000 rupees for interest and 10,000 for bank interest and all. That limit is there under section 194. I think only two questions are there.
1 second, sir. Whether
you can utilize TDS for 21, 22 for TDS extra paid in 20. Yeah, 1 plus 1 minus 1 plus 1 is allowed. Plus 1 minus 1 is allowed. You can use this TDS. It is allowed, permitted.
Okay. So, Purvina, are there any other questions? Okay, I think 2-3 questions which were there in the chat.
Threshold limit for prosecution, actually there is no threshold limit for prosecution, but department does not actually, if you see the provision does not have any threshold limit for prosecution, but department generally for small amount they don't go for prosecution. So internally up to 1 lakh rupees they are not taking any action, but tomorrow they can take any action, they don't never do. TDS applicable on fixed assets that will be covered under section that sale or 194, this 194Q and all these transactions are there. Sales and purchase of that will be covered in the net.
Okay.
You can threshold for prosecution also. If there's a delay in it, if the big amount is there, you can go for this big amount. If it is there, you can go for this compounding of offenses. Compounding of offenses is available for that. That will be a risky process, very risky because huge amount will be there. Cost will be very huge.
Yes, Avinesh bhai. Puri madam, I think the questions which were there in the chat box, it has been taken by the Avinesh bhai. So is there any other questions, so madam?
No, no other questions. People are still typing, I think. You can just see, wait for 2 minutes.
Yeah, or any of the member, if they wants to ask the questions, if we can just unmute them so that they can raise their query if required.
No,
TDS is not deposited for financial event, and the expenses are disallowed to the extent of expenses will be disallowed for the extent of 30%, not 100%.
Okay, so till the time members raises the query, there are a few announcements for the members. 21st of June, we're celebrating International Yoga Day, and on that day we have organized one virtual yoga session, morning 7:30 to 8:30. So we request all the members to join us on the International Yoga Day. Share the flyer and we'll share the link with all the members so that they can join. And our next meeting, it is on the 25th. We're having the study group discussions. It is on the prime daily features and MIS reporting. So we request all the study group members to join us with this physical study group meeting on this daily prime. On 26th of June, we have the physical study circle meeting at our Kohinoor Continental Hotel. Right, so our landmark place, wherein there are 2 sessions. First sessions, it is on the ITR forms, latest changes in the ITR forms. Faculty CA Vyomesh Pathak is it is on the ITR forms, and the next session it is on the Maharashtra amnesty schemes, wherein we are going to take through the departmental overview on the amnesty schemes, wherein we have invited Joint Commissioner CGST, Joint Commissioner SGST Maharashtra, and some of the deputy commissioners also going to join us, and they're going to present the amnesty scheme for the benefit of our members and the taxpayers. So we request all the members to please join us during all these programs. That is the International Yoga Day, and on the 25th of June, on the Telegram event, we have physical event, the study group meeting, and on the 26th of June, a study group meeting at Kohinoor Continental. So this announcement, are there any other queries?
Let me just see.
So TDS applicable, tax audit 4480, 44B, subsection D and subsection E. Bharat Bhai Oza has raised the question.
44 AD, 44 BD, 44. So that is the turnover. Actually, it is the turnover is applicable. Tax audit. See, basically, what happens that 44 AD is not because of this. According to my view, TDS is not applicable on that, because if it turnover is exceeding 1 crore rupees, that provision is there. So 44 AD, if the turnover is exceeding 1 crore rupees and you are liable, you are taking the presumptive basis, then TDS would become applicable, because that provision has come in the Act.
Okay, sir. See, Vipul Javariji has asked one question. Please guide us for the
The
fabrication.
fabrication charges comes under section 194C, because at 194C we have to see that 194C, so TDS will be applicable under 194C, so that 1% or 2% interest will see. And if you want to go for lower rate, then you have to apply for lower rate certificate, and then you have to see that if the contract is including material, and material if it is purchased from this associate parties, then accordingly that material price also has to be included as per the recent amendment.
I think there are no more questions now.
Okay, so should we proceed further? If the
Yeah.
questions are over, or if any of the members they want to raise the questions, they can just unmute themselves, or they can raise their hand so that we can unmute if required. Okay. Okay, members. I think most of the questions sir is already answered, whatever there in the chat box. So thank you very much, Avinash bhai, for having very wonderful, very precise discussions on the very important changes in the provisions of the TDS TCS recently, whatever it has comes. You have covered the important notification circulars in a very detailed manner, in a very lucid manner. So initially we were the thought by to take these sessions whether we have delayed or what, but then the Avinash bhai has rightly he has mentioned. Okay, recently only in last 3 days there are three important notifications which was related to the section 194R, which was also came I think yesterday only the sir was mentioning. So I thought then we are on the very right time to take these sessions, and we also got the very eminent speakers and who has enlightened us on the very important provisions of the TDS and TCS. So it is not delay. I hope. Right, Avinash bhai?
It was before time. Before time, all the planning was all before time.
Before time rather. So thank you, Avinash bhai for that. And now it's a time to say thanks. So it's just time to have the formal vote of thanks. So I would like to now invite our Deputy Convener, C.A. Purvi Bagheria ji, to propose the hearty vote of thanks on behalf of our JB Nagar CP Study Circle. Purvi Madam, over to you.
Thank you, Jayesh. On behalf of the JB Nagar CP Study Circle of WRC of ICI, I would like to propose a very hearty vote of thanks to today's speaker, C. Avinesh Rawani, for taking this very elaborate and detailed session on TDS and TS provisions. You have very covered all the notifications or the recent changes in a lot of detail, and your presentation is it is very helpful for all the participants. Thank you so much, sir. Thank you so much for the very nice presentation. I thank all our participants for joining us and being such a good audience. I also thank today's coordinators for helping us out with this session, and convener sir for organizing this meeting. Thank you.
Thank you all. Thank you very much.
Thank you.
We already shared these presentations with the members in the WhatsApp group, and we'll share the PPT again on the email and all, and even recording also with the permission of the speaker.
Yes, you can share it, no problem.
I think Ravindra, C. Ravindra Kohli sir wants to ask something. Can you unmute?
Yeah, no problem.
1 second. Now, sir, you can unmute yourself, Ravindra sir. Ravindra sir. Yes, sir.
Yeah. Thank you, Mr. Avinash, as well as this thing for good presentation on TDS. And I had a question now. If in case of the online subscription, where the parties are based in overseas country, and they are providing the marketing services through the online subscription, then what are the compliances which we need to do apart from obtaining Form 10F and their tax residency certificate. And how do we validate that it is equalization levy or it should be under section 195?
Equalization levy is applicable basically on the market, this online transaction, which there is a definition which is given on the equalization levy. So you have to verify whether that transaction fits for equalization levy or not.
Mhm.
So especially you have to just examine whether that transaction is fit for equalization levy is basically related to the online advertisement or such type of transactions. So if it fits for that transaction, then only your equalization levy will be applicable, otherwise not.
Okay.
So in other case that 195 would be applicable. And then
Okay.
also equalization levy also has the basic exemption limit that also needs to be kept into consideration.
Right.
And you have to take the this along with 10F certificate. You also have to take the this certificate from the this foreign resident party that it doesn't have any permanent establishment in India.
Right.
No PE certificate.
Correct.
Yeah,
Okay.
that's it.
Thank you.
And also for the safer side, you also take that the services are being provided, because recently what is happening, so many remittances are being done where the services are not being provided, and wrong certificate should not go from the chartered accountants.
Okay.
So that is just for the safety of the this chartered accountant. That would I suggest.
Okay. Thank you.
Yeah.
Thank you, Ravindra Bhai, for raising your query, and hope your query has been satisfied by the speaker, Shri Avinesh Rawani sir.
Yeah.
So it was a large gathering, and almost more than 200 members took this benefit of this today's apna session. So we thanks all the members for joining and having the passion hearing throughout this session. We thanks to today's coordinator and deputy convener also for helping us to having today's session. So thank you very much to all. Now it's a time to close the sessions.
Thank you very much.
Avinash Bhai.
Yeah, thank you all.
Thank you, sir. Welcome, sir.